Hello, everybody, and welcome back to another episode of Your Life Simplified. My name is Jack Giardino, and I'll be the host for this episode. For today's discussion, we're going to be really kind of covering a topic that you most likely are familiar with, or at least have heard. We're really looking to discuss, the influx of people moving to states such as Florida and Texas from some other states, such as, New York or California. And it's not entirely a new phenomenon, as people have been relocating to retire for years. But oftentimes, or in this case, we're starting to see some younger individuals looking to relocate to some of these southern states. So today we brought in Patrick Kimbrough, who is a senior wealth advisor in our Dallas office. Patrick, welcome to the show.
Yeah, thanks for having me, Jack.
Would you mind just taking a brief couple seconds to just give a quick background about yourself and introduce yourself to our listeners and how you got to where you are today?
Yeah, I've been in the financial planning profession since 2008, which was a wonderful time to get into this industry with all the challenges we were facing, but made a leap from an educator. I was a high school educator, taught economics and sociology and history, coached golf and basketball. So, was looking for a change where I could still coach and teach, just maybe a different client base, a more advanced topic. So made that transition in 2008. Shortly after, became a certified financial planner and an enrolled agent through the IRS, which gave me really a strong tax, investment, and estate planning background, so that I could really help my clients with comprehensive wealth management.
That's wonderful to hear. Quite the interesting change, but I bet there's a lot applicable from kind of that teaching, coaching profession to bring into the financial planning industry. Some of these individuals, and again, I stated it earlier, but you seem to be, any news outlet that you get on, you'll see a headline with discussing, the influx of people to some of these states such as Texas or Florida. So as an advisor in Texas, I'm sure you've ran into this numerous times where you interact with a decent number of clients going through this scenario I just described. Can you, describe that experience and how working with those clients may work, whether they're retirees deciding to relocate or younger individuals deciding to relocate? What does that kind of look like when you're working with those individuals?
Yeah, it's definitely popular here. We're located in Dallas, Texas. This area in particular, when you think about North Texas and you think about Plano, Frisco, McKinney, these are definitely some of the fastest growing suburb cities, not just in Texas, but in the U.S. And a lot of that is, folks moving from out of state for various reasons. One of the things that we always talk about with our clients is, especially if they're pre-retirees, getting ready to retire or in retirement, one of the first questions we ask them through the financial planning process is Dallas or is Texas your home? Are you going to retire here? Are you going to live out your years? Because that factors into a lot of the advice we're giving them even before retirement. So we always, try to get them to think about, it's a tough question to answer for maybe a 35-year-old, but some of our 55-year-olds are a little closer, and the kids have launched and maybe there's grandkids in the picture. They have a better idea of, are they going to be on the East Coast or West Coast? Or are they going to stay here? But that question, is an important one to ask of, is this home that you're living in, is this area, is it going to be through retirement? Because that's going to factor into, the estate plan. Obviously the taxes, if we're talking about tax planning now, but doing projections, over a couple of decades, if we're shifting to another state that's got, income tax or property taxes are changed, those are all variables that we want to understand, because that's going to impact cash flow and that's going to impact all the things that you want to do in retirement. So we want to make sure that we incorporate that into the financial planning process. And we try to ask that question as early on as we can, so we get some sort of an idea, because it could be a 35-year-old that's going to be taking another job opportunity that they're pursuing that's going to carry them out of state. And when they're weighing that offer letter, what does that offer letter look like when you start to incorporate, state income tax, property tax, and all these things that are going to change, access to healthcare, all of those variables. So it definitely comes in quite a bit. It's definitely a topic that we focus on as we start that financial planning process.
That's some wonderful information. We have retirees that may be considering this, but what are some of those reasons that they might want to think about staying in their current location? What are some of those reasons they might just consider staying put for the time being or throughout their retired years?
Yeah, that's a good question. And I think it comes back to a lot of times, not always, but a lot of times it's those social connections. It's family, friends, the network of folks that you've maybe built a lifetime or in this one area, and your roots are really deep, and it's just to pull those up and move 3 or 4 hours away or potentially further away from your friends and family network. I think that social connection, rebuilding that, for some people, it may give them energy. It may give them energy to move to a new city and be in a more of a city area where they can meet and mingle and grow new relationships and meet new interesting people. And that might be something that energizes them in their retirement years. But for others, it may be retirement is a much slower lifestyle, and they just want to spend more time with those friends and family that they've built those relationships over the years. So that's always balancing that out. And we find sometimes too is I can think of a few folks that we work with here in this area that kids have moved away from this area, and you may have one on the East Coast and one on the West Coast, and they want to stay in an area where here, I mean, you can pretty much get to the East and West Coast, 3.5 hour flight in either direction, and you can be in New York City in 3.5 hours. You can be in Seattle in 3.5 hours. So they like the proximity of, they don't want to favor one kid over the other and, move to the East Coast, and now they've got, 6 or 7 hour flight to see the other kiddo. So I think proximity to some of those individuals who may have moved away, I think factors into whether they stay put or whether they move. We absolutely see a lot of clients that, if you're stack ranking their goals and you tell them how important cash flow is and how impactful taxes can be to that cash flow and what they can and can't do in retirement, and then the grandkids go to Charleston, South Carolina, who cares? They're moving closer to the grandkids. So take away. So everybody weights these differently, and it's interesting to see what's most important to people, because people say, look, if I can save $5 or $6 grand in taxes, that's a lot of flights to Charleston, South Carolina. So I can get out there. So I'm not as concerned, but the social connections seem to be, for our retirees, just of utmost importance. I think healthcare providers too. If you've been in an area for a long time and you've worked with the same, primary care physician or some of your specialists that you might be working with, and they understand your situation, they've got a lot of confidence in what they're doing, that becomes something that comes up a lot too is, I'm going to have to find new healthcare providers. And the folks that I've been working with, I just don't really want to lose them. Or kind of what we were mentioning earlier, is it access to better healthcare, or is there a certain specialist? I've talked to a gentleman who bought a ranch out west. I forget what state, but bought a ranch out west and ended up getting a helicopter. He had a medical event that he needed to get somewhere quick and barely got there. So he ended up buying a helicopter so that, because he was a pilot, buying a helicopter to have on the ranch so that something happened that he could get to a healthcare facility in time to help take care of him. So that was an expense that we added to the financial plan, right? That, okay, well, that's great. You can afford all these things, but in his mind, he said that was non-negotiable. He needed that type of access to be able to make transportation, because he wanted to live there. And that's how, again, you just kind of, most people would say, I would just never live there. I couldn't afford a helicopter. There's no way I could live there. I would just visit. So all those things, depending on your wealth levels, in his situation, he was able to make that work. Relocation costs, just packing all your stuff and moving it, some of the relocation costs, if you're not moving because of work and your company's not providing benefits for that, for a retiree who may not have the cash flow or just don't want to pay the relocation expenses, those can be, buying and selling houses is not cheap. And right now in this market, you're definitely gonna pay a nice premium if you're upgrading houses or even buying one or a new one or a second home. So relocation costs can factor into all of that. And as we mentioned earlier, what's the true cost of going back and forth? If there's an area that you want to live in, a lot of people that we talk to, they're from New York, so they love New York. They still want some sort of place in New York, but in the winters, they don't want to be up there. They want to be in Florida. So, that factors into it. And then if you've got two different locations or two different homes, can you afford the carrying cost of each of those locations? Can you pay for, and are you willing to rent? Some of our clients will say, look, I want a second home. We're going to visit, however many months a year, however many trips, but I don't want to rent it. And then the economics are different, right? And if you can show them, listen, if you rent it, even if it's a short-term rental, the economics are different. Your plan works if you rent for the first 5 years of owning that location And then when you retire, you don't have to rent it anymore. You can convert it to personal use or second home. So all of those variables come in. It's interesting talking through all of this because clients are a lot of times not thinking about all these variables that are impacting them now, but most importantly as they move forward in the future. And these are things that we try to bring to their attention. And it's not us telling them what to do. It's just reminding them of here are some things that may or may not be important to you. And my objective is, tell me what's most important to you. Give me those 5 or 6 items, and then you weight them for me. Help me understand what's most important, what's non-negotiable, and we can plan around those things. But tell me what's ideal. Tell me what's acceptable. Give me some guardrails to operate within, and we'll come back and we'll show you how. My job is not to tell people they can't do things. My job is to show them how they can do things, and it's just giving them levers to pull and saying, listen, you can live on that ranch out west, but you're telling me you have these health complications, so you need to be in this sort of a proximity to a location. You're not. Here's some ways to think about getting there, more timely. A helicopter is one of them. It doesn't have to be buying. Maybe you're renting. Maybe you've got someone on call. But let's think about how to solve for all of these and weigh them equally and make that decision whether you want to relocate or you want that second home. So it's a fun process. I mean, it's fun stuff to talk about with clients, but it's interesting all the different areas and how people react differently to each of those particular categories.
Mm-hmm. Definitely a fun process. And just from, my own experience working directly with clients, we always like to tell clients, it's not we're not a can we firm, it's a how do we firm, right? How do we solve those problems, or how do we get to the solution that you want to get to? And there may be trade-offs that you're going to have to decide on in order to accomplish your overall goal. But also another important piece of that is the decision factor and not allowing your finances or the numbers to drive your answer. There's always going to be the most mathematically efficient way that you can solve a problem, but that doesn't always mean it's the right decision to make. And I think it's important to factor in all of these different variables and then arrive at a decision that you're ultimately happy with and you feel good about.
Thanks again for downloading this episode of Your Life Simplified, which is produced by Mariner Wealth Advisors. And at Mariner Wealth Advisors, we're here to serve as your advocate. We help people chart a course to reach their personal and financial goals so that they can have greater peace of mind that may lead to a more fulfilling life. We do this by always putting our clients first. Because as fiduciaries, we're required to provide guidance that's in the best interest of clients, not in the best interest of a company or shareholders or anyone else. So as you listen to this podcast and have questions about maybe your own financial situation, or would simply like a second opinion, or even you have an idea for a future podcast, please go ahead and email us at podcast@marinerwealthadvisors.com. If you found the information on this podcast valuable, please go ahead and share it with a friend or family member that you think might benefit from this information. And please don't forget to subscribe to this podcast so you don't miss an episode. Thanks for listening, and now back to the episode.
Taxes are one of the most significant things that you're probably going to take into consideration when making this decision. And so I just wanted to pick your brain real quick, Patrick. Why can taxes play such an important role, and what are some of these different levels of taxes and types of taxes that individuals should be taking into consideration when thinking about relocating to a different state?
Yeah, and I agree with you, Jack. It's not one thing drives everything, but you have to. And I always encourage folks. If you're working with someone who's helping you through the financial planning process, you want that individual to have some level of understanding of taxes, because it is such an expense. Such a large expense for all of us. And I kind of use something that you said, don't let the tax tail, wag the investment dog. I always tell clients that when I don't want to sell my investments and pay capital gains. Would you let the market, want the market to take it away, or do you want Uncle Sam to take some of it? So I agree that you shouldn't make all those decisions in a vacuum, right? We shouldn't just focus on taxes. But however, you should work with someone who has a vast understanding of both, not just income tax, but estate tax, property tax, sales tax. I mean, all, your income distributions, if it's stock options or 401k, deferred comp, all of those different distributions in different states are taxed differently. So understanding that is of importance, because if you run a financial planning model and says, yeah, you can move to Minnesota and retire, it'll be fine. And not understanding, how Minnesota is going to treat some of those income sources, or a state like Illinois. how they're going to treat those income distributions. That has to be part of the analysis, especially if you're talking about living a 30-year retirement in a different location. The numbers matter for sure. To your point, I agree. It's part of the equation. We obviously, in my office, we definitely do a lot of tax analysis and tax planning. We just think it's that important that we have to help clients fully understand what is that impact both now and in the future, because it can have a significant drag. And I always tell clients, every financial decision that you make, it's ultimately a tax decision to some degree. So we have to take it into account. But to your point, it should not be driving the decision, because, if we're saying, look, you can retire and move closer to the kids and grandkids, but you're going to have to spend, $5,000 a month instead of $6,000. Some clients will say, gosh, that's a lot of income to give up in retirement. I feel like I'm going to have to sacrifice too much. And then the spouse may say, I don't care. I don't care if I can only spend $4,000. I want to be closer to my family. And that's going to far outweigh, the finances, right? You want to be closer to your family. So all of those things, again, to your point, we're not yes or no type folks, where you tell us what you want to do and we'll show you how you can do it. And to your point, there's always trade-offs. And that decision may come down to, I want to be closer to family. Okay, well, we're going to need to work 6 more months, or we're going to need to spend, 10% less the first 3 years of retirement. Or we're just going to have to tweak things, right, to make this work because of maybe the tax drag that we're going to see moving from one location to the other, or buying that house, right? We're saying, listen, you can afford that $300,000 house. The 450 starts to stretch your plan a little bit, and that's driven by, the property tax increase and the carrying cost of that, or the HOA fees, or the insurance, because now you've just moved inside an area where we need additional coverage. Now you're in a flood zone, or now you're closer to the beach. So all those things we're reminding clients is, look, we're not telling you can't buy that house or you can't live there. Here's the difference in the cost structure and how it's going to impact your overall financial plan. So we always build buttons in the software and just push the buttons and show them and model and say, if we do this, here's the results. We do that, here are the results, and just try to help them make that decision. But part of the decision-making process has to include what taxes do both now and in the future. It's too big of an expense to omit or not show it and strip it out of the rest of the analysis and show them where the needle's really moving. And a lot of times it's the tax component of those decisions.
Mm-hmm. And one thing, we always encourage clients too, is if this is something that you all are considering, thinking about doing, whether it's 5 years down the road or 10 years down the road, let's start having this discussion now. How can we start building the plan out to point you in that right direction? And then when we arrive, closer time frame, a couple of years out, maybe the decision doesn't need to be made right this minute. Maybe we give it a test drive, right? When you go purchase a new vehicle, usually you don't just pull up on the lot and say, yep, that truck right there, that's the one I want. Go down south or to whatever state it may be and rent a place for a couple months and see what it's like. How has your lifestyle maybe changed? A lot of those know until you've lived it. And maybe you get down there and you're like, man, these Texas summers are way too hot for me. I can't live here, 12 months out of the year. I need to just snowbird down here and then head back to the Midwest or whatever it may be. But it's not a decision that has to be made, at the snap of a finger or right away. I think we've covered a lot of wonderful content today, Patrick. And if you're just sitting across, you get a call into your office or just having this conversation with a friend, or even myself, where would you recommend I start researching some of these topics and getting a feel for, different things to consider?
Yeah, that's a really good question. I mean, obviously we direct our clients to call us first, and just, whether it's you're thinking about that house in Naples that you want to purchase, or there's a job opportunity, that's taking you away from Dallas to Kansas City, and you're weighing, the introduction to state income tax. I mean, start with your trusted advisor. I think they're going to be the best resource for you. Outside of that, especially, we talked about the tax component. It's always difficult to help address all the tax components. It's pretty easy for a client to go out and go to the specific state and, look at the tax rates, both the state income tax rates, if they have those posted, to look at those. Pay attention to the property tax rates. Those vary from state to state. With retirees, especially if you do have those income sources, pensions, deferred comp, stock options, RMDs, things that could be treated differently in one state versus the other. I would definitely have you look into, the local revenue department in that particular state and try to understand. Again, I think this is, sending someone away with a lot of work to do. It's a lot of heavy lifting and something you don't want to make a mistake on, because I always remind clients that, this might be the first time they're doing it. We've done this a bunch of times. And a lot of times when they tell us where they're going, we can already tell them what the differences are in those types of things. And we can already have a general idea. So, but yeah, I mean, I think if you're looking, especially if you're a younger client, and you're looking to, relocate for a job, I think you really have to look at, what that offer letter, is comprised of, and look at the total comp. Look at the total comp, and then look at net comp after you start to factor in any adjustments for taxes to move to that state, or maybe you're moving to a state that doesn't have an income tax rate, and you're looking at, well, here's what I was making before, because you got to do the analysis between two different states. I mean, the actual, how does that feel? Net income is very different when you start to run all these through a filter. So I've had clients ask me a similar question that you asked me, Jack, where, where do I go? And there's no one-stop shop. There's no website where we can just kind of plug all this in. I think that's what makes us so valuable and helpful to our clients, is we can take all of this and distill it down into kind of a simple plan and deliver it to them. I don't think there's a one-stop shop online where self-directed folks can really answer all of these questions and make these decisions. I've had clients send me their spreadsheets of how they're trying to analyze it, and there's so many gaps. There's so many gaps that they just can't fill because they don't know where to go, or they don't even know what to think about and all the variables that go into that decision. And I think that's where when we start talking to them again, it's just educating them. We're just educating them on, well, if you thought about this, or what if you did this and it turned out that way, would that still be what, would be ideal? So I think finding someone that you trust to talk through these different variables with. Some of them are obviously not all financial, right? Some of them drift into categories where if you've got, a trusted friend or family member that you could kind of just talk through and say, like, I'm looking to relocate to this area. You're traveling to Nashville, this week, and Nashville, growing up in Tennessee, Nashville is a lot different 15 years ago than it is now. Mm-hmm. Totally different. And so, I remember growing up and, we went to the theme park in Nashville. That theme park's not even there anymore. So a lot of changes have happened. So I think you have great advice. If you're looking to have a second home or retire in a different area, go kick the tires, go check it out, go spend a long weekend there, take friends and family there, and just, see if that's where you want to be. There's a couple of books that reference how good teachers are at retirement. And I can attest to that. Is you get all summer to test it out. When I would get out of school and I would turn in my grade book, there was no better feeling than I'm turning in this grade book and I'm walking out those doors and I don't have anything to do for almost 3 months. And it's a great feeling, but it's also, sometimes, in a rural area in Tennessee, on a teacher salary, it's not like I could go travel the world. I didn't have the income to do that. So you kind of tested out what maybe a fixed income would look like in retirement. So I had plenty of time to figure out what I enjoyed, what I didn't enjoy. So I think teachers are folks that you can go to and figure out what's really important for retirement, because they've been able to test drive it. Because I think a lot of folks going into retirement, to your point, they don't know what they don't know and don't know what retirement is going to look like for them. So I think in their mind, they think, I just want to retire on a beach and I'm going to move to this area. And I'm going to live on that beach and it's going to be great. It might not be so great. You might miss having access to some of the things that you had access to before, like restaurants or movie theaters or sporting events or concerts or things like that. And you get to this beach and yes, it's zen-like, but you don't have access to some of those things in some of those smaller beachy towns. So again, to your point, I think you just have to kind of, test drive some of these places you may or may want to live in. I think that's sound advice. But when you talk about making these decisions, I really would encourage you to talk to, a trusted advisor who can kind of help you with all of these different elements, from estate planning. If you find yourself in a state that doesn't have an estate tax, you move to a state that does. That could be catastrophic to the wealth transfer. And that might be a goal of yours. It may not be a huge concern, but I mean, that can be and most people, that's easy to figure out. I mean, just talking to people that live in that state, they can kind of remind you, because it's a big number, right? So I don't think you're going to hopefully won't miss that number. But there are things like that you get there and you don't realize. And I think to your point, mingling with the locals there and asking some of those questions, like what are property taxes? Are they fixed? Do they increase? I mean, there's just a lot of questions that you can ask if you don't have a trusted advisor, but it's to your point, kind of immersing yourself in places that you may want to end up.
That's all wonderful. And I think, one thing, if you're not familiar with Mariner Wealth Advisors, that kind of sets us apart from maybe some other firms out in the industry is we segment our advisors. We don't segment our clients. So whether you're a small business owner or you're a highly compensated executive with some complex stock options, we're going to place you with an advisor. You'll be paired with an advisor that not only has the right expertise to serve you, and like you said, Patrick, taking those reps and doing that every day, in and out, and having an in-depth knowledge of kind of your specific scenario and what you may be going through, but also a personality fit too, right?
Absolutely. Yeah, couldn't agree more.
But I appreciate you, Patrick, taking the time today to be a guest on Your Life Simplified. If any of our listeners have a topic suggestion, idea, or questions, feel free to reach out to podcast@marinerwealthadvisors.com. Please don't hesitate to reach out. We'd love to hear feedback, thoughts, or any topic ideas. And thank you for tuning in to another episode.
Mariner Wealth Advisors, MWA, is an SEC-registered investment advisor with its principal place of business in the state of Kansas. Registration of an investment advisor does not imply a certain level of skill or training. MWA is in compliance with the current notice filing requirements imposed upon registered investment advisors by those states in which MWA maintains clients. MWA may only transact business in those states in which it is notice filed or qualifies for an exemption or exclusion from notice filing requirements. Any subsequent direct communication by MWA with the prospective client shall be conducted by a representative that is either registered or qualifies for an exemption or exclusion from registration in the state where the prospective client resides. For additional information about MWA, including fees and services, please contact MWA or refer to the Investment Advisor Public Disclosure website, www.advisorinfo.sec.gov. Please read the disclosure statement carefully before you invest or send money. The views expressed in this podcast are for educational purposes only and do not take into account any individual personal, financial, legal, or tax considerations. As such, the information contained herein is not intended to be personal legal, investment, or tax advice. Nothing herein should be relied upon as such, and there is no guarantee that any claims made will come to pass. The opinions are based on information and sources of information deemed to be reliable, but Mariner Wealth Advisors does not warrant the accuracy of the information.